President Trump just saved Christmas. Stocks soaring after the U.S. delayed tariffs on key Chinese imports ahead of the holiday shopping season. Everything from big tech to retail rejoicing as video games close and toys all get a pass. But wait. The telltale indicator of global growth concerns, the Grinch bond market barely budged today. So was today's rally actually your last best chance to sell? Now, we don't want to rain on anybody's parade.
No,
we are sure
never.
A lot of people out there are very happy that stocks rally today. But at the same time, for an asset class, the bond market, that has moved so extraordinarily in the past week and a half or so, for it to barely move today, that's a head scratcher.
First of all, let's be clear. Love Mariah Carey whenever I can get her, especially in the heat of the August, summer season. So, but what you're talking about is that Treasury is so 2s, 10s now at 3 basis points. We haven't been here since 2007. You have a dynamic with the bond market, long bond about to set historical lows. We've talked about the U.S. curve ad nauseum. So let's talk about the rest of the world. In Germany, their ZEW economic confidence back to 2011 levels, where we were still talking about green shoots, or so it seemed. So if you think about the equity markets euphoria today, and is it a gift from Santa, or is it truly just a reminder that the market is responding to headlines that really are masking what is going on underneath the surface, maybe as a function of trade? Look, that's where the bears are lining up. I think the bulls can say, if you remove trade war and you actually had a dynamic where we felt comfortable that geopolitics as the trouble hotspots were not going to take the world down, that the economics for stocks right now in a low rate environment are not awful.
They're not awful, but we haven't removed trade war. We've just said, you know what, we're going to delay trade war for now on certain goods.
Right. So, I mean, the bond market is obviously much more rational than the stock market. Stock market's moving based off of a tweet, it seems like, every other week. Bond market, much more rational. Nothing has changed on the trade front, right? I mean, we just kicked the can down the road to basically save the holiday season. The market is seasonally weak until October, and you ask the question, is now the best time to get out, or the last time to actually exit stocks? And then when you add in the fact the 210 is close to inverting, if that happens, I think you see a full-blown algo sell-off.
I mean, to be fair, we've seen the 210s close to
Hold on,
inverting for a while.
we got to take a step back here.
Wait,
guys,
are you going to find
it sounds like Dan's going to be a voice of
guys, you're talking about,
Mr.
I hear
Sunshine?
like something constructive happened today by somebody saved Christmas. Guys, the president created this latest crisis out of whole cloth.
It's not what we thought.
On August 1st at 1:10 or 1:15 p.m., the S&P was in 1.5% from all-time highs, trading fabulously at 3,000. And then all of a sudden, we get this tweet about this extra 10% on $300 billion. This was created by them. This was a crisis created by them and solved by them. And I think it's very interesting that the S&P 500, while it did gap significantly today, closed well below those levels from August 1st.
But you don't think it's been solved?
Of course not. They created a crisis, and then they solved it. And they want to take credit for it. Right. It's ridiculous.
Well, Dan, I think when you look at what the message of the charts was today, has anything changed? Well, we're still in no man's land, right? We've been sandwiched between this 28.22 last Monday's low, 29.42. It's the 50-day moving average. We failed there now twice. I think you have to get back above that 29.40, 29.50 level to make the case something has changed over the last week or two. If you look at the internals today, breadth, barely 2.5 to 1. So it wasn't that big, broad move that you typically get coming off a good tradable low. So I think there is more work to do here if we're going to call the all clear. I think it's premature for that.
Well, XRT, it was my final call yesterday. I said to sell it.
Had
but,
a great day
hold
today.
on, but it gapped up $2, Mel, and it closed up $1. That's not a great day, given what you think happened in the broad market. If you look at the bank stocks, the S&P closed up 1.5%. Bank of America closed up 30 bips. Most of them closed below 1% on the day. That's not great strength to me. So as you head into retail earnings in the next week or two and you get disappointing earnings, they're going to give it all back. That was a bad setup then if you got this bounce into earnings and they don't actually confirm it. So to me, I actually think there's plenty of pockets of risk. The fact that we didn't close above 29.50 or something like that is a problem too. So I think rallies get sold here. I think people got offside.
So I'm glad that you brought that up, because Tim, Best Buy was your final trade yesterday. Be a seller of Best Buy. Part of it was because of the trade war. Does this sort of encapsulate the danger of trading on these headlines. You know, the Trump tweet, the assumption that tariffs would go into effect September 1, which they're apparently not going to.
Yeah, let's be clear. I mean, we got CPI numbers out, and I'll address your point of a bad final trade of mine last night. But we got CPI numbers today that said core CPI was also up 0.3%, not just, you know, ex food and energy. There is inflation, but more importantly, for a lot of the retailers, and we're going to hear this, I think, from Walmart. But so back to Best Buy. Best Buy, who effectively is importing all of this stuff from Asia, is in a very, very difficult position. For a company that to me has gone through both just the whole secular shift in their business model and where Amazon has kind of wrecked and destroyed them, but their reliance on imports from that part of the world is unlike, to me, any other big box retailer in the world. So when I look at look, they already gave some guidance. Their last round of earnings already knocked it down. It's a company that, to me, when it trades cheap, it'll trade even cheaper. As we all agreed on this desk, nothing happened today. A 7% spike in something like Best Buy, to me, tells you just what kind of anxiety there is in that business model.
And we sit here, this is a big moment. There's trade, there's Hong Kong, there's Brexit, there's Argentina, and we have the S&P off 3 from the highs. Is that enough, given what the headline risk is? Now, if you put this in context of the last 6 or 7 months, maybe that is enough, right? Every single time it's been bought.
Enough to get you back to the prior high and then maybe trade 1 or 2% above it, because as we talked about last night, since January 2018, when we had this blow off top after the tax cuts in late 2017, we have basically just made 3 incremental new highs, and that's not enough. And we flush after all of them. The biggest one was 3% above a prior high.
So what's the lesson of today's action to you?
The lesson is you
sell this and then
I think so.
And then buy pullbacks?
I just think so. Listen. So what happens to this, Mel, is that let's say this call with the Chinese doesn't go well. Let's say they don't come to Washington in September. Let's say we have another tweet. The problem that I see is that every little tit for tat thing, the risk of an accident increases fairly dramatically. And I think people just forget that the market sold off 20% in nearly a straight line in Q4 of 2018. I think there's a dip that you may not want to buy in the not too distant future, especially given all the uncertainty that we have right now.
The chartist, what is the message of the charts in your view?
The message is nothing has changed over the last week and a half.
Okay,
I think we have to look.
Means?
I think we have to look at this move as no one's getting paid. Bulls aren't getting paid here. Bears aren't getting paid here. We need resolution here. Above 29.50, I think you want to buy it. 28.22 is your line in the sand if you're tactically long.